So you're not that fearful overall, then, it seems like, of a broader market pullback. On the point about the clearinghouses, on the point about some of the brokerages from Robinhood to Interactive Brokers, both of whom CEOs have been on our air in the last 24 hours, can you understand their decision to restrict trading? Was that just a sensible risk management decision on their part?
Well, so I'll start by saying I'm not in these markets today and not inside all of those decisions, but as a market professional for many years, I know how the market works. It's important to step back and look at this and see that short squeezes have been with us since the beginning of capitalism. What is different this time is that now we have the viral amplification, multiplication, propagation of memes, thoughts, feelings through social media, through social trading platforms. And that, it seems, is exacerbating, it's speeding up the short squeeze, making them more violent. And so really important that all the market participants, and I mean all, be properly capitalized for this kind of thing. Because otherwise, with these business models that maximize user engagement, because they're selling the aggregate user attention to somebody else, those models, if untrammeled, if left unrestricted, can rapidly erode through capital. The people who run the models have the benefits. Society is left with the downside. So crucial importance for regulators and politicians to work together as they have done in the financial crisis. In the financial crisis afterwards, banks were required to run stress tests and to hold a lot more capital. And we saw during the pandemic that the banks continued to lend, provide liquidity, do what they were supposed to do. That kind of approach absolutely needs to be extended to big tech and people who have these kind of social trading business models.
I'm glad you brought up the societal question. That's sort of where I wanted to go, Marty. For so long, there were calls to get more retail investors and traders into the market, to have them join in and also reap the benefits of a rising market over years after the financial crisis. Is this a healthy way to do it? Are we going to look back on this week and decide that this was better or worse on that front?
Well, Sarah, I've been talking with some of my friends, one of my favorite people, Jim Espo, about the parallels between political populism and capitalistic populism, right? And so it's really important to intervene here in some way because we have entered into a really different regime from the one that we were used to. And they're just, as we're seeing in these risk management decisions, there needs to be capital in the system to count for these kind of extreme events. I am all in favor of the democratization of finance. My whole career was all about, as you know, extending data, analytics, market access, and broadening that out. But while I support everybody's right to day trade stocks, I don't. I rebalance 7 ETFs 3 or 4 times a year, and that's what I recommend to everybody. So let's not call it investing, it's gambling, and with gambling come the downsides, the losses, the potential for addiction, and so we need education. We need a lot to go on here to fix this.
Shepard Smith here. Thanks for watching CNBC on YouTube.